What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm doing a quick study break for my exam that I have tomorrow. And this one's going to post actually today for Tuesday. And I'm going to do a quick speed run. There's a monthly dividend close-ended fund called ECC. I'm going to go over this real quick because somebody mentioned this to me, and I need you guys to be aware of certain things, especially with close-ended funds. There's pros and cons to them. So we're going to go over that real quick. So let's check this out right now. So here's a stock, Eagle Point Credit Company. ECC is a symbol. So in 2015, it was $20.48, and now it's $12. During the pandemic, it was like $6.28. Dividend yield of 14.00%, a PE ratio of 5.44, average volume 302.89K, market cap $495.17 million US dollars. Year range is $11 to $15.54. Day range is $11.82 to $12.13. Its previous close was $11.82. So what are these guys about? Close-ended funds, you got to look a lot of digging into these guys because there can be some problems with them. Well, let's check these guys out. One thing got to be aware of is the price per share in the beginning to the end is down. So that's one thing you got to be aware of. Let's jump to their portfolio and what they're about. Eagle Point Credit Company is a publicly traded closed-ended investment company that is registered under the Investment Act of 1940. Company's common shares are publicly traded in New York Stock Exchange under the symbol ECC. Our primary investment objective is to generate high current income with a secondary objective to generate capital appreciation. We seek to achieve our investment objectives by investing primarily in equity and junior debt tranches of CLOs. So we need to look into a few things with these guys. One thing that irked me a little bit is they have a lot of things, kind of had to do a lot of looking around with these guys. That's one thing that's kind of had me a little bit weary. Okay, so that's one thing I was like, gosh, I can't really find that much stuff. Let's look a little bit more into them. So I'm doing a little bit of digging. Now, they didn't show a lot on their website, so now they're a bond. One thing that I don't like are bonds. They're turnoffs to me. So that's one thing, and there's the investment percentage is right around here. Corporate's a little bit on the low side. So that's one thing to look into. And I see that 1 star. Now, again, bonds are... Morningstar doesn't really like bonds that much, so okay, I'll let that slide. But let's look a little bit more into them. So at one point it was kind of quarterly, and then it looked like it went to monthly. 2016 it was quarterly to monthly. And we got 45 cents in 2017, 18 cents. We're still at 20 cents. So again, these guys weren't very transparent on their website, which turned me off. And then all of a sudden they're at 8 cents. You can blame the pandemic. Then they're at 10 cents. And then they're at 12. They got this little 50-cent thing. They're at 12. Then they're 14. Okay. Dividend growth 73.68. You can, it's 16.50 dividend yield. Dividend growth of 73.68 because you can blame the pandemic. But there's one thing that really they weren't showing on their website, and I'm going to show that to you. A 9.71% expense ratio. So the yield's high, and a high expense ratio, and you look at this price per share in the past 10 years, it's gone down, and it really hasn't improved. Now you can blame the pandemic for 2020 down here, but it does not look good. So you have an expense ratio of 9.71, a decrease in dividends over time, and it's trying to rebound. But imagine paying a 9.71% of expense ratio when you can get QYLD or even Vanguard BND still do a better job than these guys. So this is definitely a yield trap. This is something that you need to avoid. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description, but this one is absolutely a no. I would not touch this one with a 10-foot pole. So I just want to do a quick video for you guys. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Wednesday, you're going to get the flaws of QYLD and why I like monthly dividend stocks better than QYLD in the long run. So QYLD ain't all that. So I wanted to show you guys why I like monthly dividend stocks better than QYLD. So stay tuned on Wednesday. Make sure you hit that notification bell. And if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Definitely had to point this one out with this close-ended fund. This is a very popular one that people are bringing up and forums and everything. And somebody actually brought it up to me to do a review on them. So you guys take care and have a good one.